Hello and welcome to Ask Me for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Wall Street seeing red today, continuing a bruising stretch for tech stocks as investors weigh the latest retail earnings and signals from the Fed on rate cuts. At the end of Thursday's session, all major indices did end the day lower. Well, the Fed chief and the commander-in-chief have been at odds a long time now as Jackson Hole awaits Fed Powell's speech. We're talking to an expert on the strained relationship between those two powerful men. And there's an uptick in do-it-yourself home projects as Americans now put off buying new homes. We're exploring the correlation of this trend and mortgage rates. Well, Fed Chair Jerome Powell speaking on Friday at the Jackson Hole Economic Symposium. Fed watchers will be focusing on whether Powell signals that he's willing to cut interest rates at that Fed September meeting. This is all coming against the backdrop of multiple threats by President Trump to remove Powell from his post and pressuring him to lower interest rates. For more on this contentious relationship between Powell and Trump, we're bringing now Chris Leonard, author of The Lords of Easy Money, How the Federal Reserve Broke the American Economy. Chris, it is good to see you. So let's start there, Chris, on that relationship between the president and Powell. You know, I think Trump's views on Powell, Chris, at this point are pretty well understood, pretty well telegraphed. He is not a fan. Why do you think Trump really hammers on Powell, Chris? You know, does he really want him out of there, or actually maybe Trump wouldn't mind keeping Powell around because, hey, that could be, Chris, a useful scapegoat if the economy were to go kind of wobbly here?
I mean, that's a great question. I mean, first of all, the irony here that we have to remember is that Trump appointed Powell to the job. I mean, Jay Powell was Trump's guy, and things really went south for the first time around 2019 when Jay Powell was cutting rates, reversing quantitative easing, and the economy was looking wobbly. That was the first time we really saw Trump go after him, and Trump did it in the sort of first term way, if you will, using Twitter, the bully pulpit, hammering Powell, bullying Powell. And in fact, a couple months after that, Powell did cut interest rates. I don't think there's any evidence it was because Trump was pressuring him to do so. But now, again, this conflict has arisen. And, you know, your question about how serious this is, I think, is almost impossible to answer. It's difficult to know what Trump's real intentions are here, except to push for a short-term policy that he seems to want, which is a rapid and relatively large rate cut. And, you know, that's interesting because by all accounts, I mean, the Fed is planning to cut rates in the medium term anyway. When you look at what the Fed is projecting, they're expecting to start cutting rates gradually in 2026. And I guess Trump just wants it to happen more quickly and maybe more drastically than the Fed wants it to be.
Even if Chris, Trump doesn't try to force Powell out, are there other ways he could try and undermine Powell's credibility?
Oh my God, you're seeing it right now. I mean, what's so interesting, I talked about the Trump first term method, which was sort of this public relations attack on Jay Powell. We're seeing that again. And you know, you saw the famous press conference where Trump went to the Fed's renovating headquarters, hectored Powell about the overruns in costs. We're seeing the tweets. But this time, there are actions being taken that are much more serious to undermine Jay Powell. You know, for example, I'm sure you saw the recent allegation from the Federal Housing Finance Agency that one of the Fed governors has committed mortgage fraud and should quit. Well, you could really see that as an effort to undermine Powell, because if that governor leaves, you know, Powell is going to lose a vote on the all-important board of governors, and Trump could put someone in that position who might vote along with Trump. So what you're seeing now, I think, is a much more sophisticated attack on Jay Powell's independence that is a lot more intense than what we saw the first time around in 2019.
For all this hot talk, though, Chris, and for all this hot criticism, political pressure, do we think it's actually impacting Fed policy?
Well, you're getting at the impossible question. I mean, you know, the Fed, as you know, is built to be insulated from this kind of pressure. The Fed governors who make these decisions, the regional bank presidents, They're not elected. They will never run for election. They're supposed to be insulated from political pressure, but they're human beings. And you see time and again when you look back over the past that they're reading the papers every day. They realize where the political currents are going. And so the interplay we've seen over time, it's really subtle. How much do they feel that the Fed's credibility is at stake? How much pressure are they feeling from the White House? Those things can affect these decisions because these are human beings after all. But we do have to remember Jay Powell essentially cannot be fired by Trump. I mean, the Supreme Court has weighed in on that. This is not an easy thing to do. Jay Powell's a serious guy. He's not going to commit the sort of, breach of conduct that could lead to a Fed chairman getting fired. So there's a lot of insulation, and I think that there's a very strong reason to suspect that Jay Powell is going to pursue the policy he thinks is best to keep unemployment as low as possible, and to B, keep inflation as low as possible, regardless of what Trump says.
Chris, some I know might argue, hey, listen, okay, so Trump is criticizing Powell. He's criticizing the Fed. A lot of politicians criticize Powell and go after the Fed. Elizabeth Warren and Maxine Waters, and they might say, listen, what's wrong with that? This is America. Presidents, senators, lawmakers in Congress, if you have an opinion, voice it.
Absolutely. And, in my book, I'm critical of a lot of Fed policies. I think the Fed stepped out of the bounds of the authority that was meant to be given to it in the early 1900s when it was founded. The Fed has tremendous economic power and certainly should never be immune to criticism or scrutiny. That's just a fact. But I think the really important thing to remember here is that, Federal Reserve independence isn't just some kind of, theoretical good or theoretical idea. The markets really have to have confidence that the central bank, with its all-important job of creating currency and managing our currency, that it is going to act independently of the political currents of the moment. And the most important thing, really, that the Federal Reserve has to do is to think long-term about the health of our currency. So even if what it's about to do creates short-term pain, like, for example, if it has to raise interest rates to bring inflation down, even if that's going to create a lot of political headaches in the short term, the Fed needs to be able to do that independently for the long-term health of the economy. So that's why the independence is so important. And yeah, the Fed takes heat from all sides. I mean, boy, I have learned everybody loves to criticize the Fed. The White House is different. I mean, the power of the president's voice, and now what we're seeing, the actions of the executive branch can have an effect on the Fed that Elizabeth Warren or, random pundits can't have.
All right, well, Jay Powell, we're going to be listening closely tomorrow. Jackson Hole, I'll be listening. I'm sure you will too, Chris. Thanks so much for your time today.
Thank you.
Stick around. Much more Ask for a Trend still to come. U.S. stocks closing lower with the S&P 500 sliding for the fifth straight day. Drop comes as Fed Chair Powell's speech looms over rate cut hopes. For more on the trading day takeaways, let's get to Yahoo Finance's Josh Schafer. Josh,
it was another day. We keep using this word rotation, right, in the stock market. And what we've been seeing a lot is just a lot of losers from the year, a lot of losers from the quarter. The laggards have been the winners, right? So what I'm going to point to here, let's go to a year-to-date on the sector. If I can find it, there's my year-to-date. So the sectors that had been sort of leading, right? You have tech over there, you have utilities, you have industrials. Well, let's flip to a month-to-date and look at where you have tech, look at where you have utilities, right? So that has been the trade. That was a little bit of the trade today. You've seen the healthcares, consumer staples, that sort of defensive tilt. And if you just look at today's action, something a little bit similar, different mixes of exactly where those sectors fall. But again, you haven't seen tech be the leader, right? It's been that flow out of tech. That's been the trade for essentially over a week now. And it's been also, you've seen small caps catch a bid. The Russell 2000, I think, closed just above in positive territory today, while the S&P 500 did not. So that's been the trend. Of course, the question would be whether or not that trend continues, right?
Yeah, on that tech lag there, Josh, I mean, do you think it's late August, nobody's around. No one's at their desks. It's really just Josh and Josh. That's
Yeah.
it. And let's not make too much of it. Or no, you think, hey, this is actually, maybe it is signaling something more meaningful.
And so I think, Josh, what's helpful with that, right, is let's look at, say, the Russell 2000, right? That's been kind of one of the rotation out of trades would be, well, we're going to buy small caps, right? We're going to go down in cap size. But if I put a year on it, Josh, you look at areas where we're talking about the Russell 2000 a lot. The rotation's coming. The rotation's coming. Even if I put a 3-year on here, again, you've seen fits and starts with that rally a lot. And what strategists are saying right now is tomorrow's going to be a big day when we hear from Jay Powell. September's going to be big. Are the rate cuts really coming? The market has started to get excited about these rate cuts. An index like the Russell 2000 and sort of that broadening trade probably needs those rate cuts. So basically we need a little bit more data and to be a little bit more confident. But if that move continues, then strategists do think maybe we do start to actually see the broadening truly happen. Remember, that Russell 2000 hasn't hit a record high in this bull market, while a lot of the other indexes have.
All right, Schafer, bullet point number 2.
Interesting manufacturing data today, Josh, out of S&P Global. So manufacturing picked up in August. It hit its highest level in over 3 years activity. So that would be positive from an economic growth standpoint, right? But the release actually sort of cut 2 ways. So good on the growth front. This is prices paid across all sectors. That's not good, right? That's a potential indicator of future inflation, right? And so companies are saying they're paying more, they're passing those costs on to consumers. So what you got here is a decent read on the overall economy. S&P Global's economists saying maybe it's 2.5% GDP we're pacing out for the third quarter, but also looking at higher consumer prices too.
And so how do you think that that impacts the Fed narrative, Josh? What do you think Jay Powell makes of that?
Yeah, it sort of looks maybe stagflationary or maybe even reaccelerating, right? I mean, S&P Global's economist, Chris Williamson, actually pointed out if this was really the case and you had GDP truly accelerating and you also have inflation accelerating, I mean, that's when we start talking about rate hikes, right? And so that's not really, of course, in the conversation at this point, but just simply looking at this data point, it definitely doesn't argue for more cuts, Josh. So when we think towards September and those debates that are starting to trickle in of whether or not they're actually going to cut, you could put this data in the bucket of maybe not.
All right, final point, Schafer.
Final point. It's a big day tomorrow, Josh.
Yeah.
We've spent all week talking about
Wound up for this day.
Chair Powell's speech, 10 a.m. tomorrow. And I think what's going to be interesting to watch is just really what we were getting into, right? Does Jerome Powell come out? He's certainly been perhaps on the more hawkish side of Fed officials. He's not talking a lot about cuts. He's not talking about interest rates needing to come lower. And you had a guest on earlier today, Calvin from BNP. He pointed out if Powell talks like that again, like he did at that July meeting, might shake the market a little bit. We might see a little bit of a sell-off. Maybe look at that Russell 2000 we were talking about, right? That's been rallying on rate cut hopes. If Powell comes out negative tomorrow, or maybe they're not cutting in September, you might see some pressure in those kind of areas.
Do you think the action you've seen in the market this week, do you think in part is that suggesting, hey, maybe markets, investors kind of rethinking whether that cut in September is a lock?
Yeah, I mean, I think a little bit, right? But I also think you've seen a market that's favoring that cut, I would argue, right? You think about home builders have been rallying. They would benefit from interest rates, right? We just talked about small caps. So you've seen interest rate sensitive sectors over the past week, over the past 2 weeks, sort of catching a bid. So I guess you could argue maybe the market's getting a little bit ahead of itself. Again, if Powell doesn't come out and be a little bit more lenient on when they're going to be cutting and the fact that the direction of interest rates will be lower.
All right, all eyes on Jay Powell tomorrow.
Yes.
Thank you, Josh. Stick around. Much more As for a Trend still to come. A common theme out of retail earnings this quarter has been value. Americans are seeking out lower cost alternatives as they get choosier with their dollars. The Lowe's CEO telling Yahoo Finance's Brooke DePalma that consumers are, quote, waiting for more confidence in the economy before they spend. And we're seeing some of that dollar-conscious consumers show up in the data. 71% of homeowners are motivated to tackle a DIY project in order to save money, it's according to Angie, and 62% are more concerned about affording maintenance than they were at the end of 2024. Well, joining me now is Angie Hicks, co-founder of Angie, formerly Angie's List, a platform that connects homeowners with home improvement service providers. Angie, how are we seeing that DIY trend evolve right now? Walk us through it.
Well, really, people are still wanting to take care of their home. But they're focused now on making sure they're taking care of the necessities. And, DIY is one way that oftentimes homeowners might think, hey, I could save a few bucks if I DIY this versus hiring. But what they have to keep in mind, and what we've seen, is that 25% of homeowners have had to hire a pro after they've tried to DIY something themselves. And when they have to do that, it often means they're spending more money than they expected. So be really honest with yourself about whether you have the time, the tools, and the talent to tackle a project. And make sure you start with small projects, like painting a guest room, for example, as your first projects. But definitely leave bigger projects to the pros like roofing, electrical, and HVAC work.
What are some of the more popular DIY projects right now, Angie? Do you have line of sight there?
Well, a lot of times painting is a common one. Also, things to do with lawn care, gardening, things like that, landscaping. They'll tackle those projects themselves. But really, when it comes to the more skilled trades, they're more likely to leave those to the pros because they take more expertise, as I mentioned, like electrical, plumbing, as well as HVAC.
Are there tips and tricks, Angie, you would advise people with if they're attempting some DIY projects?
Yeah, if you're attempting one yourself, first figure out what it's going to take to do it. Start small. Start with a small project that's not meaningful. Don't start with painting your living room. Paint that guest room instead. And then also make sure that you set aside enough time. Homeowners also often comment the fact that these projects take longer than they expected. So if you're stringing together weekends to do this could take weeks to do a project, whereas a pro might take a day or two. So be honest about how much time. And don't forget, you need the right tools. Don't just assume that it looks easy. I saw a video about how to do this. Make sure you have the right tools because that's going to help you get the best outcome.
Angie, we're always looking for line of sight in the consumer. It's why we pour through these earnings reports so carefully. We listen to CEOs and CFOs. You have line of sight there. What are you seeing?
Well, this year has been interesting. Homeowners are spending a lot more on non-discretionary items. They're not doing the wants, they're doing the needs. So making sure that they're repairing their roof, tuning up their air conditioner this summer, things like that. Demand looked a little soft like in April, but we've seen the summer pick back up. But still, people are trading off and deciding which of these projects they want to tackle. But when it comes to your home, people also aren't moving and life isn't stopping. So, if your family's growing, you need extra space, they still probably might choose to do some of those projects. They might still choose to do a bigger project, even though, because in the end, it's cheaper than buying a new house.
When you say, Angie, people aren't moving, why is that? What explains that trend?
Well, it really comes down to interest rates. if you're sitting on a 3.5% mortgage and, if you're going to move, you're going to be at a 6.5%, that's a big decision to make. So they might choose to do more projects around their current house than trade that interest rate. In a recent survey, we found that homeowners said they're living in their existing house about 5 years longer than they're expecting. So if you are in the market to buy a house right now, you need to look a little longer term. You may not be, flipping this house in a couple of years. So think about what your life might be like 7, 8 years from now and make sure you can buy a house that can grow with you.
Last question, Angie. We talk a lot about the Fed on the show and the market's betting that cuts coming in September. And we talk a lot about it through the prism of investing, which makes sense. I think a lot of people are thinking about it, what it could mean for the housing market in this country. The home, for a lot of people, it's their biggest, most important financial asset. You'd like to see the impact there on the housing market, more activity. I'm just curious to get your thoughts on that.
Yeah. If interest rates come down a little bit, you'll start to see people choosing to move. People are kind of sticking to their own house right now. And that will give more opportunity. More demand in the home improvement industry too comes from moving. People do projects around the time that they're moving. So that could result also, as interest rates, if they potentially come down a little bit, it might open up people's interest in using home equity lines, for example, to do some of those bigger projects.
Angie, great to have you on the show today. Thanks for joining us.
Thank you.
Well, that's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.